It looks like we will have another new record close for the TSX today. We will see if it holds until the end of the day. The markets in the U.S. are mixed, but let's go to Bruce Campbell, President Portfolio Manager, StoneCastle Investment Management, to talk about what's been going on. Thanks for joining us today.
Yeah, thanks for having me on.
So last week, things got pretty battered down. Software technology sort of dragged across all. What are you doing on the technology front? Have you moved to other parts of the build-out?
You know, we haven't. We still have a fairly good position in technology, certainly not in the software sector, but, you know, in a lot of the hardware areas and some of the other areas of the market that include technology. So we continue to see strong earnings growth there. And even in the software sector, I mean, you haven't really seen that much deterioration in the earnings yet, but the market is always forward-looking and is concerned about that.
Okay, did you hold software and get rid of it, or did you just not hold software?
Certainly, we haven't had any software in the last little while. Over the past history of the fund, we certainly have held software, but that's really based on a bottom-up process that we use to identify stocks that have the fastest earnings acceleration.
Okay, let's talk about the rotation, because we have seen it, and we talk about the small and the mid caps that are now benefiting from the rotation. Do you anticipate this trend to continue for the year?
You know, we really do. If you take a look at what we've seen from an earnings standpoint, that's really what's driving this rotation, in our opinion, as well as valuation. Because if you go back a couple of years ago, we really saw the acceleration in the earnings for the Mag 7, and you know they were increasing their revenue at close to 50%, and their earnings at around the same rate, and that rate of acceleration is decline now, so it's not negative, it's still positive by about 20%. But that compares to, you know, if you were to look at the Russell 2000 a year ago, that rate of acceleration was negative, and now it's turned positive. And typically when we see these trends happen, they're not just for a quarter or two, they tend to last, you know, multiple quarters in a row, you know, where you get out to probably like 18 or 24 months or longer. So it's not a surprise to us really that we started to see the smaller cap market start to broaden out and accelerate really in kind of the fourth quarter of last year. And it's really continued that trend through this year as well.
What do you think is drawing investors to smaller cap at this point?
Well, it's really that earnings acceleration, right? So as you see the earnings acceleration come in, and then the second thing is valuation, in that, you know, in some cases, not all, but in some cases, the valuation has been beaten up in the smaller areas because they really didn't recover to the same degree that we saw large caps recover out of the 2022 bottom.
Okay, let's get to sectors that you like right now. We touched a bit on technology and what you're doing there. What are the sectors you like overall?
Yeah, I mean, it's hard not to like the precious metals and materials sectors right now. I mean, based on what we've seen happen with the commodity prices, you're seeing amazing cash flow acceleration in all of those companies. So we have a fairly good weighting there. And then as well, we have, you know, fairly decent exposure to industrials. We're starting to see that area of the market really accelerate. If you kind of go back into 2022, what we really saw was a manufacturing and industrials recession. The overall market didn't go into recession, but we certainly saw those areas go into recession. And now we're seeing that recovery, and we're seeing the stocks move up as we see stronger earnings across the board. And then the last sector that, you know, we have more interest in right now is the energy sector. And even though the price of the commodities have dropped down off their highs, we're seeing increased cash flow from a lot of the businesses because they've focused so much on their capital and their capital strategies. And as a result, they're really driving that cash flow going forward.
Okay, so let's talk about a few energy stocks you like right now. Bloom Energy is the first one. They are out of San Jose, California. What do you like about Bloom?
Yeah, I mean, they're not an energy company as you would think about as in oil and gas. What they do is they actually produce energy systems. So with all this, the hyperscalers and all the demand for electricity, they have a solution that allows for electricity to be generated on site, and it's modular, so they can add to those modules as more energy is needed. And the interesting thing is they use fuel cells, so it's not combustible, and so it's very green and very efficient. And if you look at what's happened with their earnings and revenue have just been ramping up over the last probably call it 6 or 8 quarters now, and they continue to have a huge backlog. They continue to have an increasing service business as well.
Okay, let's get to your second energy play, which is Tenaz Energy. Tell me about them.
Yeah, so Tenaz is an interesting company. They have some small amount of North American assets in Canada here, and then they have these international assets over in the Netherlands. And they bought those international assets from a large super major that really had that property on maintenance, and so it allowed them to go in, buy this for a pretty decent price for sure. But it's now allowing them to go in and do some drilling and to do some recovery work and some enhancement work on those properties, and they're getting increased production. And at the same time, the management team has told us that they're going to be doing more acquisitions like the ones they've done in the Netherlands. So we always have to watch for that, because they did that in an amazing way where they basically financed the acquisition mostly through the cash flow from the property.
Okay, I do want to get to your third pick here, which is TTM. They do circuit boards?
Yeah, that's right. They do printed circuit boards, and then they also do some radio frequency technology. This is used in, a lot of the areas that are really growing right now. So space, defense, autonomous vehicles. And if you, again, look at what's happened with them from a earnings standpoint, from a revenue standpoint, those numbers continue to ramp up in a significant way.
Okay, I'm looking at 605% over 3 years.
Yeah, I mean, it's had an amazing run, and it's now into that mid-cap space as far as the size goes, and I think there's probably potential for it to continue to grow here.
I was going to say it took off mid 2025, I guess, and that's then it shot up after that. But you think there's room to grow?
Yeah, I mean, one of the things that they have, kind of listed is that they want to be a leader, a world leader in this. And they continue to expand from a geographical region. They're in the US, and they continue to just grow and expand beyond that. So there's huge opportunity as they continue to grow their market in other areas geographically.
All right, Bruce, we will leave it there. Appreciate you joining us. Bruce Campbell is President, Portfolio Manager, StoneCastle Investment Management.